My name is Olufemi Sheyi. I'm a real estate salesman. I buy, build, and sell real estate. And welcome to Fireside Conversation. Today, we're going to be picking a topic that is real estate related. And is a question or is a conversation I've had with some of our clients, particularly the ones who actually have their base outside the country or Nigerians in diaspora. So let's take it. You have your money and you want to buy a property in Nigeria and you come to ask me, what should I do? I would tell you, do not spend that money, keep that money, and then go take a mortgage with any of the mortgage bank. Of course, you remember that before you even get a mortgage, you need to drop your equity commitment. So let's say the house is 150 million, for example. You have to drop equity commitment of 50. So let's take a look at it. The answer I've gotten from 95 to 99% of people I spoke with has been like, no, why do I want to take a mortgage and then I'm paying interest at 25%, I'm paying interest at 28%. I would never do that. It's too expensive. Now, when people ask me that it's too expensive, rather, I usually would ask them compared to what? And then if you take time to look at the figure, you realize that if you had kept your money and then taking a mortgage in Naira, you probably are getting the house for free, and I'm going to prove it to you. But before I go to the board to start proving it to you, I want to say this, that of course I understand that part of the challenge that the mortgage system that we have within the mortgage environment in Nigeria is one, it's very bureaucratic. You need to submit document and upon document, and in fact, some of the banks will ask you to bring the genotype of your grandfather and then the DNA of the king of your village. So it's understandable that there is a lot of bureaucracy there, but this is the point. It pays to actually go through that mortgage. The second thing, really, that most people say is the Is the rate or the cost of that. But I already covered that. And then also, this is what I would say. Most people say, why do I need to do that? The interest I'll pay will be nearly times 4. Yeah. But what are you going to gain if you keep your money? That should be the question. So let's do a bit of calculation. I need you to follow me here. I'm going to bring to the table to the board, right? 2 tables, 2 calculators. Now look at this. This is a mortgage calculator, right? And then the second one that we're going to need is a compound interest calculator. So we're going to use the example of the guy who has 150 million. I'm not even saying if you keep it in dollars now. Let's say you already change it to Naira and you're ready to transact. And then you pay down your 50 million. Your 100 million that is with you, do not give it to anybody. Hold it, and then this is what you're going to do. Now, you're taking a mortgage of 100 million. That is what it means. So let's do a bit of quick work here. You take a mortgage of 100 million. 100 million, where's the numbers? And then you already paid home price. Home price is 150. Let's use home price is 150. So let's take it at 150. And then you're paying 30%. You're paying 30% commitment deposit. Or let's even say you pay 40%. So you pay 40% as commitment. Your down payment is 40%. How much would that be? That's 40. And then your loan term is 10 years. So you do a loan term of 10 years. 10 years. And then your interest rate is 28%, which is what it is. Between 25 to 30%, that's what we have. Well, let's do 28% for the sake of this conversation. You start in October. You don't pay property tax. You hardly do that in Nigeria. So, and then even if you have to, your tenant can pay that. You can factor that. You don't do home insurance. So for this, just to make it clean, is 0. Is 0. And then what else? Our other cost is 0. Okay, whatever. Let's put other cost as 44 million. Let's put it at 4 million. You would pay this cost. Actually, you would have paid whether this is 4 million. You would have paid whether you're buying by mortgage or whether you're paying outright anyway. So let's just quickly move on. And then I think we have this completed. So let's go to calculate. Now, I want you to keep this figure. So this is what you're going to be paying. Total out-of-pocket expense, the home price is 150. You paid 40%, which is about 60 million. That means, you paid about 60 million. And then by the time you are fully done, you would have paid principal, total out of pocket expense. You would have paid, how much would this be? I think this is 150,000, right? It will be about 335 million. It's supposed to be 150 million here, right? So you took a mortgage of 90 million naira, and then you paid over 10 years. Your total payout is actually, what's this figure? Total out of pocket is about 335 million, thereabout. This is what you're going to be paying on a monthly basis. So sorry, apologies, I made that mistake. Your total payout will be 268 million for the 90 million naira mortgage that you paid. What it means is you took a facility of 90 million to buy the house. You already paid 60. And then at the end of 10 years, the total interest and principal that you would have paid, excluding, of course, your equity, is about 268 million. Now, if you look at this figure, absolutely, you would wonder that because the interest rate is so high, why would I take a loan of 90 million? I'm sure that you will wonder that you take a loan of 90 and you are using it to pay 263 million. That is crazy, right? It's not. It's not. So let's prove it. So this is if you're taking the mortgage. Now, this is what you do. Let's assume that you, instead of dropping the 150, you dropped 60 like we did for this mortgage. That means you have 90 million, right? Cash that you have in your pocket. And you decide, this 90 million, this is what I'm going to do with it. I'm going to invest it. And this is what you should do. If you are taking it to squander it, it will not work. So just give me a minute. Let's assume that you had the cash. Instead of dropping it because you don't want to pay 260, you said, okay, I have the cash. I am going to put this cash in an investment. So that's 90,000, right? I put the 90,000 in an investment. It's 90 million, but let's just use at 12%. And, I put it in federal government bonds that is going to provide me 15% return. I'm going to be paid every 6 years. It's supposed to be 15%, which is doable readily at the moment. And then I keep it for that same 10 years. I don't do any additional deposit because it's just that fixed rate of 90 million that I'm keeping. And then I don't increase it because I'm already. So let's say that's what you do for the next 10 years. The question is, how much are you going to earn from that 90 million that you're keeping aside for the next 10 months? Your total return, the value of your 90 million at the end of 10 years is 382 million. So what it means is that investment has paid for the loan. That's number one. And then you still have change. But that's not even the beautiful thing. The beautiful thing about that is while that money is yielding for you, you are also need to pay off that money. This money is paying for itself. I don't know if you understand what I'm saying, guys. Now, if this money is paying for itself, you get the house maybe after 1 or 2 years. On top of this money that the return that the 90 is giving to you, you start earning your rental on that property that you have. Am I correct? So let's say that because you bought it, average rental income is about 5%. 5% of 150 is about 7.5. That means you would also have earned 7.5 per annum for 8 years. Yes, they finished building 2 years after you paid. But for 8 years, how much would that be if you were to calculate it? 7.5 times 8 million. That's additional roughly about 56 to 57 million on top of this one. So if we were to look at what your total return is 57 plus 382. What it means is that's about 440 million thereabout. So it means that you have paid for, your investment has paid for itself, and you still add extra cash in hand. I don't know if you get it. So if you look at the calculation significantly, it pays to actually keep your money and then go take that mortgage, fix the money. The only problem is if you are not disciplined and you want to just go and withdraw and spend. But if you do that, at the end of the day, your total return, by the way, your house would have appreciated too. Your total return is above 400. That's nearly 150 or to 160% much your return that you would have gotten. So it means that your investment can actually pay for itself, and then you're still going to have cash and you're still going to have your property. Now, if you now decide that this 90 million, because I'm based in US, I want to put it in dollar denominated instrument, Eurobond. Just use, I would say Eurobond because the rates are better. And then you want to put it there. And then you kept it in dollars at that certain percentage at 10, let's say even if it's 12%, and then we experienced significant loss in the relative value of Naira in recent time. You can imagine that the value will be much more than this. So if you were to ask me, if I have the cash and should I just drop it or should I take a mortgage? I would tell you on the facts of the figure alone, you should take the mortgage, put your cash in an investment account that can provide you between 12 to 15% return. But beyond the financial gain, what else is the value? When you decide to actually go through a mortgage bank, first of all, the due diligence that is going to be done will be done by the bank. Of course, that's why we factored in additional 4 million or whatever million that is there. The bank will do the due diligence before they get you the loan. So you can be sure that the bank will not have invested this if there's a problem. The developer or the owner of the original owner of the house is accountable to the bank because they collect the document on your behalf. And then the bank is accountable to you because they are responsible to make sure that you will not stop paying the loan. So they want to be sure that the property is good, the title is okay, and they are in control of the transaction. And then you can actually, so they do a lot of the legal due diligence beyond what you are making here. A lot of the legal due diligence is done by them. So, and then also the bank monitors, particularly for some of you that are not around and maybe it's off plan and the project is under construction, the bank provides a bit of monitoring for you because they know that your continued paying of the mortgage is heavily dependent on the property being completed and handed over to them. You see, you can see all the benefit beyond the money, the fact that you have an intermediary that actually engages the developer on your behalf, and then you can actually rest a bit better, knowing that they are going to actually be held responsible until you finish paying that particular mortgage. But this is the most important thing, the discipline. Once you say, look, I want to take the mortgage, I already have 90 million. I'm not going to spend it. I'm going to put it in this fixed income instrument that will continue to yield for me. You will not touch it. And what is the worst thing that can happen? If you wake up tomorrow and you say, look, I'm tired of having to hustle to pay because I've kept 90 million. I'm no longer interested in continuing this process. You just go back to the 90 million you have, liquidate the investment and use it to pay off your mortgage. So my advice for you, even if you have the cash, is to go that route. Beyond the fact that it's financially rewarding for you, beyond the fact that the due diligence is better done by that party and you're handing over that responsibility to them, you are also going to be contributing to the economy because you're going to be helping the mortgage industry to grow. I understand that the rates are a bit high. It's not like single digit that you have outside the countries, but it's still very profitable for you if that is your decision. I hope this has been of value to you. If it's been of value, I'd like you to do me a favor. I'd like you to subscribe to our channel at Kasafina Development on Facebook, at Kasafina Development on Instagram, and then at Kasafina TV on YouTube. I need you to do that because my team behind this camera, they've insisted that if I don't grow the subscriber base, they would stop supporting me. So I'd like you to just help me so that I can help them. I hope to see you next time. Till then.